investors. It's Mike from MJF Invest. Today's video is going to be about ARK Invest's weekly innovation newsletter. Every Monday, I subscribe to ARK newsletter. I'm also subscribed to their daily trading desk. But as far as the weekly newsletter goes, there's tons of information and great ideas to work off of in this newsletter. And I just want to bring it to you. I don't know how many people actually do this. If you don't, I suggest that you do. But I'm not a financial advisor, so you should be doing all your own research, and ultimately it's your decision whether you want to, what stocks you want to buy and sell. But this video is going to be a little bit different in a sense that I'm not going to really recommend or do this video with certain specific stocks in mind. I'm just going to let you know what the information says and how we can use it to our advantage. But before I go any further, please hit that like button, blue thumbs up. I'm approaching 150 subscribers, and my first month is officially in the books. So I'm starting my second month, and the channel's growing nicely, so I appreciate all the early support. You guys have been great, a lot of positive feedback. Let's keep the momentum going. So if you're new, hit that subscribe button. Let's talk stocks in the comment section. The first thing I wanted to touch on, which I thought was really interesting, was how live sports are basically keeping linear television afloat. That live sports are preventing 60% of cable customers from cutting the cord and just going to fully streaming platforms. This letter touches on how Amazon has the rights to a Thursday night football game that usually is broadcasted on Fox, but it's going to be exclusive to Amazon. It's the rights to one game that could be done for a reaction to see if some of these streaming platforms are going to start bringing live sports to their service. It could be something down the road. Netflix, Roku, Amazon, Hulu, who's owned by Disney. They could be bringing live sports to their platform, which would decimate cable television, according to this report. Linear television already has been struggling tremendously, and the fact that 60% of their existing customers are basically they stay there and pay that monthly fee specifically for live sports. So I found that really interesting here. Within the next year, contract negotiations will begin for 3 of the 4 major sports leagues in the United States. As shown below, the NFL, MLB, and NHL will be able to cut ties with major sports networks in 2021. So we should be definitely keeping an eye on if they will. Disney has a pretty good relationship with the NBA and Major League Baseball as it stands. They also own ESPN, as you know. But ESPN has gone, with their ESPN Plus, they've gone to a more streaming service. The writing is on the wall. Most of these companies know that to survive, they have to become a more streaming platform. So this could be extreme revenue for some of these already massive companies. Also, Cruise automation updates its autonomous plans in response to Waymo's announcement. Probably going to be the first one to market, but the way ARK's researches it, their research suggests that autonomous driving industry will submit to natural geographic monopolies thanks to the amount of location-specific driving data necessary to launch. With high vehicle utilization rates, first movers will be able to collect big data and build significant barriers to entry. Waymo will be the first company to launch a commercial autonomous service. But a competing platform could take majority share by scaling at a faster rate. The more real-world driving miles a commercial service collects, the better the autonomous system is likely to perform. So right off the bat, you got to be thinking Tesla. So they're not afraid. If Waymo is the first to the market, they pretty much know that Waymo will be. But Tesla, once they get there, and they're not far behind. Just the amount of data that their autonomous vehicles are collecting and will collect, that it will be pretty basically pretty easy for them to surpass and take this market over. And that's really something I wanted to talk about with Tesla, is much more than a car company. But the real vision with Tesla, to me, is all the other things that they do. That's what really sets them apart. That's what makes them one of my favorite companies, you know, available. Several of the people that I respect in this industry have touched on this and see Tesla as much more than a car company. And the autonomous taxis are a big part of that. I won't give you the exact number, but it's in the trillions. They see that market is in the trillions already, what the revenue that they're bringing in with the cars. And we've already seen that Elon Musk really knows how to ramp up production and grow production at a really incredible rate. The way Tesla's grown is absolutely incredible. And this is kind of like the same concept. And they touch on that as well in this newsletter. Iovance Biotherapeutics, their tumor-infiltrating drug combined with Merck's Keytruda delivered an impressive overall response rate of 44% in patients with head and neck cancer. Patients on Keytruda only had an overall response rate of about 16%. So, I mean, as you see here, that's very good. I just recently added Iovance to my watch list. This is a really fascinating drug, and really groundbreaking in what they're doing with cancer. So, I mean, I don't know if anybody's familiar with ticker symbol IOVA, but I just added it to my watch list, and I'm digging, I'm researching. I'm not at the point yet where I'm going to do a video, but could be coming in the future if there's any excitement about it. Also in this newsletter here, again, this is stuff that I wouldn't know unless, I subscribe to this newsletter. So I find this information important. What I'm going to do with this information is still sort of unclear, but I have an idea or direction that I might want to head. Certain sectors that, that are, to stay away from. And one of the last things that I wanted to touch on, basically the bad ideas report came out last week, I believe last Friday. And basically the gist of it says, today we believe the global economy is undergoing the largest technological transformation in history. Disruptive innovation should displace industry incumbents, increase efficiencies, and gain majority market share. As technologies emerge and transform entire industries, investors in traditional benchmarks may face more risk than historically has been the case. So these are the 5 sectors or industries that they say they wouldn't put $1 in at the moment. 1, physical bank branches. 2, brick and mortar retail. 3, linear television. 4, freight rail. 5, traditional transportation. And, we touched on some of that in the video. So ARK is telling you to stay away from these type of things. Brick and mortar retailers are more or less companies like that are, basically brick and mortar stores that you go to, physical locations, remote locations, stores that aren't going with the times and hitting more of that e-commerce platforms. They're advising to stay away, but I'm not a financial advisor, but they are, and ARK is, and to me, they're the best. And again, if you've been following my channel, you know how much I really admire Cathie Wood and her staff. ARK Invest in general, her analysts are all amazing and awesome. Again, I don't think you should follow blindly what ARK does, but I definitely think you should be paying attention. What is ARK doing? What is Berkshire Hathaway doing? What is BlackRock doing? What is Vanguard doing? What is Goldman Sachs doing? What is Merrill Lynch doing? I consider all of that. I have my favorites. I have, the ones that I admire and respect more than others. But I certainly pay attention. I don't blindly follow. I don't always see it the way they see it, but I'm aware always of what they are doing. I always think that's very important. And if you could take one thing from this video, I hope it's that. These big institutions are the ones. We fall into their traps a lot of the times. you know, we're buying at high prices and then we get caught holding a bag and end up selling at a loss. A lot of that is because of this big money and these big institutions. So that's definitely to be aware of. I'm looking to do more content in this nature. So if any value in this video, please hit that like button and subscribe to the channel for future content. And again, let's talk stocks in the comment section. Thanks for watching.